Hey, this is Niall from learntotradethemarket.com. In this video I'm going to talk about my favorite setup called the FAKEY. I did a video on it a couple of weeks back. I had a few people email me and they weren't really confident in the setup the way that I explained it the first time around. So I'm just going to have a look at it again and explain it for those that weren't too sure. Pardon me, if you've still got questions, I want you to post in the forum any uncertainties, and I'm happy to recreate another video on another pair if you still don't understand the setup. Alright, so we've had another FAKEY setup on the sterling US this week. Now, although this is in hindsight, you've got to bear in mind that I really can't give specific live trading advice, so I have to look back in the past and show you something that's happened, and usually that's the best way because you'll be able to use it in your own time and learn the best way to trade the setups with your size account and your personality. So let's have a look at the sterling US. Okay, we're going to be paying attention to all the price data that is to the left of this signal bar here. We want to look to the left. Okay, so let's assume we didn't know that this bar was forming. The only bar that we knew that existed at the time was this inside, almost inside bar. I think it was an inside bar. Below that, yes, it was. So this bar here was the Tuesday bar. That was inside the Sunday-Monday bar. Okay, and then what actually looked to have happened, we had a resistance region here. I'll just put that on so everyone can see. If we just draw a line through here. So the market was encountering selling pressure, okay? And what happens when the market tests a major sell level like that? It'll consolidate. It's hit there, it's consolidated, we had an inside formation, and then what's actually happened, the market broke lower. Okay, so everyone's getting short and they're believing the trend is over and it's looking to roll back to 196.94. So we get a lot of short sellers that move in off this inside bar break. And what happened on that particular day was it hit the 21-day average and started to push higher. So the buyers started to move in at lower prices. And then they pushed it above the session high. Now, whenever you get an inside break that moves down and then moves back above the session high for the day, I call that a FAKEY setup. And it's an automatic signal. You just take the trade, and you can implement your own stop management, own profit target management. But whatever the case, it's a bullish signal in the case of it moving down first and then back up, and vice versa. It's a bearish signal if it moves up off an inside break and then down. So if we narrow down to a smaller chart, let's say a 60-minute, I'll take you to that exact day. Okay, let's take a look at Tuesday's session. Was here, and then we had, this was Tuesday's session, and now we've got a break below these lows. The break below those lows there was effectively the inside break. Okay, this session was in the Monday session and we broke lower, and then if we just get this line, the session high for Wednesday was here. Okay, it was around, let's have a look, it was 19866. Now the strategy is to either take the pin bar reversal, which was on the 240-minute chart, we'll get to that later, but if you're just trading off hourlies and you've got your signal off the hourly, you're buying on stop through the session high, and then you have this subsequent rally in prices over the next few days as the shorts cover, and you get a lot of fresh long positions, and we've had an eventual breakout. The other way to look at it is we go back to the daily. You could have taken the signal on the close of that actual day, because look at the size of this bullish pin bar. I mean, this has a big tail and it's bullish because it closed higher. That's a bullish It's a key reversal day off the 21-day average. So there's a few ways to be looking at that setup, but it all comes from a false break below the 2 and 3 day lows. I don't know if you can see this false break through here. I mean, really, it broke that level and shaked everyone out and pushed back up. I call that the fakie. That's the setup. I'm pretty sure I've made that as clear as it can be. What you're really doing is you're capturing a market that is on the wrong side of the trend. So whenever the market gets it wrong, it shakes out a lot of players, and they all have to cover a position and reverse their positions, and that's what fueled the British pound this week, is off that key bar. Most people were in the wrong side of the position, so they had to reverse, and they would have bought this breakout last night, and they're still long, and I'd expect this to trade above 2 into the next week or so as fresh longs enter on this breakout. So that's it for now. Any questions, go and post something in the forum or send me an email. Appreciate you listening. Take care. Have a good weekend.